Afternoon, everybody. Hi, Bill.
Will, how are we?
Very well, thanks. And you?
Very good.
Good, good. So, new sanctions. We're going back to Ukraine again.
Yes.
Markets are off for that reason, is it?
Yes. Simple fact that the U.S. started it last night, unilaterally said enough is enough. You know, I think there was another incursion and a helicopter was shot down with this, that, and the other. And basically the U.S. said, well, not only did they begin sanctions again, but they went after some of the biggest, the oil companies, the natural gas companies, Rosneft and stuff like that, saying, you know, enough is enough. And so basically, last time I looked at the Russian MISEX was down over 2%. The Russian ruble against both the euro and the US dollar was off 1.5% to 1.8%, heading towards the lows that we've seen in May. And I think that's, quote, kind of shaken up Europe. I mean, I think both the DAX, CAC are on off 0.8% of 1%. At one point, the FTSE was off 0.7%. And just looking at the Wall Street futures after 14, 15 consecutive up days, look like there's going to be a little bit of profit taking.
Okay. And so how have the Russians responded to this? Are they, do they really care?
No.
They don't care, nor will they.
Yeah.
But it'll get to the point where they, you know, there's so much pressure
Yes.
put on, you know, the high figures in.
And I think maybe we talked about this before, where my feeling is the large individual Russian investors, after seeing their portfolio off 8, 10, 15, 20, 25%, so to speak, and what they may or may not own, I think they will force Putin to say, come on guys, you know. And I think what is really affecting it is the major impact it's going to have on the Russian economy, okay? You know, when they first imposed the sanctions and we saw the MISEX go off, this was the major reason saying that, you know, we've got a problem with Russia anyway. Growth is going nowhere. Unemployment is rising. Now, this is only going to enhance the problem because, I mean, if we're putting on sanctions on the oil companies, on the natural gas companies, what is that going to do in reference to their exports? So, I mean, we see this superficially with both Brent and West Texas, both up today well over, you know, 1.5%.
And so with that oil, that's also down to, you know, issues in Israel, etc.
Yes.
How serious is that?
Well, had we had this conversation yesterday, it would have been, well, the Ukraine didn't end the world, the ISIS didn't end the world, and yes, you know, I'm not trying to be frivolous about the situation with Israel and Palestine, but it's sort of like every couple of years it happens. But now the situation with first the US and now the European Union talking about they will look to increase the sanctions against Russia. That is having, you know, again, the same sort of impact we saw in May.
Our investors now are kind of used to sort of trouble flaring up here and there, and they're thinking, you know,
Yes.
you know, what happened with the Ukrainian markets bounced back up, same years kind of ignoring it now.
And again, I'm not trying to be frivolous, but you're absolutely right. I mean, it's one of these, yeah, okay, so it's Ukraine every 6 months, and again, Israel and Palestine every 2 years or something. And, you know, the ISIS jihadists, you know, all of a sudden, you know, it had a limited impact. We saw Brent crude get up to about 115, and that, you know, we were also seeing it sell off prior to today. We'd had like 8 or 9 consecutive days, and we saw actually West Texas trade below, you know, $100 yesterday.
Okay. So the major indexes, the FTSE this time last week when we sat here was off 200 points in a week. It's recovered somewhat, but why are we not seeing, you know, multi-year highs in the FTSE when, you know, the Dow is now over 17,000 points? Is that, how much is that down to the strength of the pound? Is that?
I think you just said, I think what we've seen here, and it may have started 2 days ago, when Janet yelled at everybody saying, oh, okay, you know, I've got the video, the DVD, if you're as old as I am, you have the Sony Betamax. Well, I think she kind of surprised the market saying, well, you know, with some of the terms you used, and of course, you talk about connecting the dots and the SEP. Now, the market, excuse me, just in the last 48 hours, has moved the first Fed rate hike from mid to late 2015 to probably early mid 2015. You're not seeing any change in the bond markets. I mean, the 2-year still around, you know, 0.48%, the 10-year about 2.5.
What did she tell us that kind of?
Well, I think basically she didn't tell us anything different. And then, you know, we got the beige book. It's modest to moderate growth. But I think people now beginning to feel, well, you know, inflation starting, we got the PPI number, that started to go, housing improving, and I think one of the things, I think the average now in the last 6 months is 233,000 jobs, but now I'm not trying to be negative yet, but I think a lot of those jobs are like the same type of jobs here, part-time. I'd rather be part-time and earning nothing, so when the recovery comes, you know, I'll be in the front of the queue for the permanent jobs. So I think the market, again, now one of the things to look at, and where I've looked at it, we saw a fairly dramatic, is probably being overly dramatic, but I mean, you know, we were talking 170, 150, 172, how high could cable go? Well, now we're struggling at, you know, 171-ish, and the key was, you know, we were 136.25, and every day it was 136.25. I mean, you call any broker, what's euro? 136.25. Oh, thank you very much. Now we're struggling again at that 135.02, which would be an intra-year low so far. Excuse me. And the point being is that one of the things, and we may have to go back to a year ago, May, when Chairman Bernanke basically said, okay, well, quantitative easing is over. We're probably going to start sometime soon. And then you had what they call the taper tantrum. And you saw a massive sell-off, excuse me, in Brazil, Russia, India, China, Turkey, okay? A lot of the emerging markets. Now, a lot of that was, again, hot money, okay, that had gone maybe out of the dollar. Now, one of the things that I'm looking at, okay, if the market firmly starts to believe that we will start seeing a truly improving U.S. economy, a true situation where the Federal Reserve will start raising rates like a year from now rather than 3, 4, 5 years. I mean, there's some people out there that said they wouldn't see rates going up in the States until 2016. So I think one of the things where the academicians were all talking about, oh, you know, this quantitative easing, like we saw in 29 or 30, or this, that, and the other, you know, will cause more recession. Well, it hasn't, okay? I mean, there's been no recession in the States. And one of the things which I'm quite interested in, okay, if you look at any academics, if you look at any quotes, what's going to happen? I mean, I have never in 45 years in the marketplace seen a rally in the Treasury market and record rallies in the Dow, the S&P. Something has got to give, but I don't think it will, because the simple fact is, I think we could see the people who have been bullish on the dollar. Should I raise my hand? I think all of a sudden going to be that justified. I could see a very, very large percentage of, quote, hot money that had gone into the emerging markets starting to come back and say, well, let's start hollering for the dollar.
And the dollar is undervalued, just the pound overvalued? A lot of people are saying it is.
Yes, I think it is, okay? I think what we've seen now is, ever since Carney took over, which was a year ago, July, you know, the market's saying, well, I think he'll probably be more assertive. And I think the market started to feel, and we started seeing that after July. You know, they did nothing last July meeting, but we had a statement from the first time level. And then, of course, a lot of the sterling bulls started to say, well, all of a sudden, mid-2015, then it all of a sudden became the maybe second quarter and first quarter. You know, my feeling is, you know, we did it in November. And I mean, there were even some people, especially when we got the inflation number at one point, that could come as early as October. October, I think, is too early. November, I'm calling for, but also, and we may have discussed this, you know, it's not written in the Magna Carta that any moves by the Bank of England have to be 25 basis points. You know, and I've said this several times on some of those other channels. Yeah. What's wrong with an 8? What's wrong with the 10 basis points? And I mean, even now, I'm starting to see in print now from people that are far more legitimate than I am saying, hey, what is wrong with, you know, maybe 10 basis points? Slowly. Because you see, up until pre-Lehman, I think the average repo rate here in this country was 5.5%. Well, I felt since Lehman Brothers, we'll never see 5.5% again. I mean, we may get to 3.5% maximum. But I can't, you know, I hope I'm right. I just can't see inflation. You know, I mean, if we were concerned about inflation, first Ukraine, then ISIS, we should have had Brent crude at 125, 130 rather than struggling at 115. And also, whether you like it or not, I mean, with the U.S. fracking and this kind of stuff, and the U.S. being probably, within the next 4 or 5 years, being a major exporter, maybe one of the largest exporter of oil and natural gas. Well, that's going to take a lot of the firepower out of OPEC.
Okay, so generally economic data is very good, particularly in the States as well. It's starting to turn good. It's earnings season, that's been pretty good so far as well.
I mean, everything that you've seen, I mean, like Morgan Stanley today, okay?
So where's this big correction coming from there? Wants or a lot of our clients things coming?
Well,
Do you
I think
it's-
I think the correction will be.
Or won't it happen? I mean, there's no reason for it, is there?
It may be sector. I mean, like I think the first time ever, like 2 days ago, you had the Dow and the Dow Transportation Index, excuse me, for the first time ever, having all-time highs on the same day, okay? So now, if that's the case, are they then concerned, if the transportation index is going up, are they concerned about crude oil going to $115, $120, $140 a barrel? I don't think so. And I think one of the things, you've got the Microsoft situation. One of the things I think you'll start seeing now, whether it be Microsoft laying off 15,000 people, then Fox and Time Warner. I mean, the old days mergers used to be 10 or 15. Now it's 30, 40, 80 billion. And now is it a situation we're going to have mega mergers because certain segments of certain companies aren't working. I mean, isn't Microsoft going to do something like with Apple? So I mean, 5 years ago, would anybody ever thought you'd see something like that happen because they were quote two different type of companies? Well, all of a sudden, maybe Microsoft. Oh, excuse me, I'm sorry, IBM. Maybe IBM, didn't know how to get into iPads, and Apple said, well, I don't know anything about cloud. Maybe we start doing that. So they're getting bigger and they're starting to merge. And one of the things, yes, I see we're having an improving U.S. employment picture, but is it really? I mean, I think if you look through this, so much of the U.S. employment picture is either one, people, I'm looking for a job for 6 months and I can't find one, or I'm willing to work more temporary work. And we were talking about this a couple of weeks ago. I mean, 10 years ago, everybody wanted to come to the city. They don't want to be, do they? I don't think so. I mean, I think that if you look at talk to the headhunters, okay? I mean, the 5 best jobs are care workers, dental assistants, anything that's old age pensioners, anything that's medical related. That's and I mean, even in the United States, you're seeing applications for law school and MBAs in business. Well, people are not looking at that as being the great growth industry of the next 5 or 10 years.
I agree, but anyway, a wonderful summation of the markets and economics as they stand. Thank you, Bill.
Thank you.